Big changes are happening in stock market right now. While major stock mutual funds just took a massive hit, everyday investors are quietly moving their money into two specific sectors. At the same time, a multi-billion-dollar deal just dropped that's its huge green flag for energy, defense, electronics, and infrastructure stocks. And the US is officially completed its military strikes in Iran. Hello everyone, welcome back to Stock Market Meridian. Today's date is 10th June 2026 and you're watching today's post-market video. Today, markets are opened at same previous day close level and ended in neutral zone. Nifty closed at down 0.12%, Sensex closed at above 0.09%, and Bank Nifty closed at down 0.17%. As we discussed on today's pre-market video, US completed its military action on Iran in response of Apache helicopter attack. And other side from Iran, there is no such big statements yet in related to this at point of recording this video. And here the latest mutual fund data for May month is officially updated, and it's painting a very interesting picture of where your money is going. We are seeing a major shift in investor sentiment. Some parts of the markets are cooling off while others are hitting record highs. Let's break down exactly what happened this month. First, let's talk about the big headlines. The cash flow into stock mutual funds took a massive hit. Net equity inflows dropped to 22,897 crore rupees in May month, down from over 38,426 crore rupees in previous month. That means investors are getting much more cautious about buying stocks right now. This is a significant dip. It's clear that investors are becoming much more cautious about buying stocks right now. Total SIP investment came in at 30,954 crore rupees this month, which is vertically unchanged from the 31,115 crores on last month. Even when the markets get volatile, the everyday investors sticking to their commitment. And that consistency is exactly what long-term wealth building is all about. Now where people putting that fresh cash. Even with the overall slowdown, investors are still heavily betting on growth. The small cap fund led the pack with nearly 4,946 crores. In mid cap fund followed closely with over 4,385 crore rupees. On the other side, interestingly, in India's safe haven, the large cap fund has dropped significantly. We saw an inflow of only 1,592 crore rupees in May month, down sharply from 2,524 crores we saw just 1 month ago. And finally, let's look at the commodity space, because this is the where biggest surprise happened. For over a year, gold was absolutely unstoppable. But in May, the 13-month winning streak for gold ETF officially ended with a record amount of money flowing off. And silver ETFs saw a massive inflow of 2,133 crore rupees in May alone. Investors are clearly betting that silver might be the next big performer. It's a bold move and definitely something to keep an eye on. So overall, investors are cautious about large cap stocks, but they are still committed to SIPs on mid cap and small cap growth. And gold is taking a backseat to silver. Meta is making a massive multi-billion-dollar bet on India's infrastructure, triggering a huge green flag for the stock market. Meta is leasing a massive 168 megawatt AI data center from Mukesh Ambani's Reliance. To power this massive network, Meta is partnering with CleanMax to build around 900 megawatts of renewable energy project across Rajasthan and Karnataka, including 837 megawatts of brand new solar and wind farms. For stock market investors, this is the proof that global AI boom can't survive without massive clean energy. This deal acts as a huge long-term revenue booster for Reliance Digital arm and signal a massive growth wave for listed green energy, solar and power grid stock nationwide. Before getting into the video, remember that I upload pre-market video every single morning before market opens and post-market video right after the close in the evening. Please watch the full video. If you think this video is informative, then subscribe the channel and hit the bell icon so you don't miss any updates. Now coming back to the video, Bharat Ford just dropped two game-changing updates that are about to send shockwaves through the stock market. First, Bharat Forge told CNBC that they just won their large ever India Army carbine gun order. Their defense business is booming internationally, with a massive 40% of their defense revenue now coming purely from exports. They are seeing an absolute global demand surge from in India. Second, the company officially announced that they are working on a brand new semiconductor project. For stock market investors, this changes everything. By stepping into high-tech chip manufacturing alongside their explosive defense businesses, they are unlocking an entirely new multi-year growth engine. This stock is positioning itself as a massive powerhouse. When this news came in the market, the stock rallied to upside. And another defense company released a positive news. Bharat Dynamic just revealed some massive numbers that guaranteed a huge wave of future business. Bharat Dynamic officially announced that its total order book has reached at around 26,176 crore rupees as of March 31st, 2026. A massive order book like this is a huge green flag because it means the company has years of guaranteed stable work already lined up. But it's get even better. On top of what's already confirmed, the company expects another 15,000 crore rupees worth of new order in the pipeline for the current financial year. This massive order book ensures highly reliable revenue growth and strong earning visibility for long-term shareholders. And there is two major updates from Indian government. First, the government is considering anti-dumping duty and other trade measures to curb cheap steel imports into India. This is a positive development for domestic steel manufacturers as it could reduce pricing pressures from imported steel and improve profitability. Stocks like Tata Steel, JSW Steel, Jindal Steel and Power and SAIL maybe remain focused. Second, there is an update from solar sector. An Indian trade official has indicated that India expects a US review of anti-dumping duty on Indian solar products. If trade restrictions are eased, it could improve export opportunities for Indian solar manufacturers. Solar and renewable energy related stocks may be increased investor attention on this development. Next, Nuvama Wealth has officially received its final approval from Indian market regulator SEBI to launch its very own mutual fund business. Instead of just selling other companies' investment products, Nuvama can now create and manage its own funds. This changes Nuvama business model. Moving heavily into asset management gives the company a highly predictable, high margin, fee-based revenue stream. Analysts see this massive expansion as a strong long-term profit driver for the stock, especially with how fast Indian mutual fund industry is booming right now. Next major update is the Indian energy companies are teaming up to push for a massive regulatory change that could completely unlock hidden profits. Top energy producers including Oil India, ONGC, Hindustan Oil Exploration, and Vedanta, are asking the oil and gas regulator PNGRB to lift restrictions on gas pipeline network. They want a green light to connect major national pipeline directly with smaller regional network, making a gas distribution incredibly seamless. As per the sources, this single move could instantly free up 10% of India's trapped gas production. For upstream oil and gas stocks, high distribution efficiency means immediate revenue growth, better profit margin, and a big push to their bottom line as India relies less on expensive foreign imports. This is a massive structural shift for the energy sector. Next, Hyundai Motor India just reported a fire incident at one of its key supplier facilities. Hyundai announced a fire broke out on June 1st at its supplier facility, Mobis India. This has caused a temporary production halt, which is mostly limited to Hyundai's Chennai Plant 1. On the bright side, the Pune plant and Chennai plant are running completely fine and remain unaffected. The damage control is fast. Chennai plant 1 is restarting production by June 15 and everything will be 100% back to normal by June 22nd. The company explicitly stated that they expect no major impact on June retail sales and will recover the loss of output by next quarter. Next, LTIMindtree has officially launched Blueworks currency. This is a first of its kind AI-linked commercial model designed for the agentic AI era, where autonomous AI bots run core business processes. Instead of billing clients based on the number of hours coding or working, LTIMindtree will now charge based on actual business outcomes. Simply, this is like a postpaid services with extra benefits like how much of user will use their AI as per that bill will generated. This innovative model helps client capture a real, measurable AI efficiency, giving LTIMindtree a huge competitive edge to secure massive high-margin enterprise tech deals. Literally, LTIMindtree is rewriting the rules of of IT billing. And there is an interesting update from EliteCon International has officially announced a massive 700 crore rupees roadmap to expand heavily into the FMCG market. They are targeting a mind-blowing 20,000 crore rupees in total revenue by the year of 2030. Right now, EliteCon has a market cap of just about 4,300 crore rupees, setting a sales target that it's multiple times larger than the company's entire current valuation shows extreme ambition, making it a high risk, high reward growth story to track. But in this geopolitical conflict, situations like raw material prices are going higher and global sea route exports are getting tougher. Can this company really achieve their target? Just let me know your thoughts on this below comment section. Next, Dixon and its subsidiary have officially signed a binding contract with Taiwanese tech giant Gemtech, create a new joint venture in India. Dixon will own a controlling 60% stake in the business. Their goal is to manufacture and supply advanced optical transceivers, including specialized data routing components like SFPs and VOSA modules. Optical transceivers are the critical high-speed parts that power modern fiber networks. At present, global AI and cloud computing boom, demand for high-speed data centers is skyrocketing. This move gives Dixon a high-margin revenue engine supported by India's electronic manufacturing incentive scheme. Dixon is now officially a player in the AI infrastructure race. Next, as per the Business Standard report, that NTPC is preparing to launch a massive contract worth over 10,000 crore rupees for its Rajasthan nuclear expansion. The official project invite for the Crore nuclear island. Building phase is expected to drop by June 15th. From this update, there is two main keys. First, it transforms NTPC from a traditional coal power company into a massive clean energy giant, driving its long-term valuation up. Second, a giant contract like this will bring a massive multi-year revenue to list heavy engineering and construction stocks to win the building bids. Next, Marine Electricals has officially bagged fresh new order worth over 44 crores rupees. The order comes from directly state-owned defense giant Garden-Rich Shipbuilders and Engineers. Marine Electricals is a small-cap player specialized in tech-heavy power system for ships. Scoring a multi-crore deal from a premier government shipyard is a huge validation for their tech capability and guarantees clear, stable revenue growth for their upcoming quarters. So those are the important updates you need to know. We'll meet you right here in the tomorrow's morning pre-market video. Until then, signing off. Bye bye. Jai Hind.